Welcome back to Living 808. Spring is a great time for sprucing up your home. Now, whether you're doing a simple remodeling project or starting from the ground up, just thinking about all of the work and the planning that needs to go into it can be a bit overwhelming. And that's before even considering all of the costs associated with things. But what if you could take some of that stress out of it, especially on the financing side? Sounds great, right? Well, that's what we're talking about in today's Money Matters. We're joined by Kali'i Peltier from Hawaii USA Federal Credit Union. He's here with 5 options on how to pay for your project. Hello, thank you so much for joining us.
Hi.
Okay, if someone wants to keep it simple, straightforward, what's a good option for that person?
The best option would be cash. Of course, if you have cash on hand, you can go ahead and pay for the goods and services, to remodeling your home. And right there, cash is king. Don't need to worry about paying interest, all that good stuff, and it's real simple. So cash would be the #1 choice.
Okay. However, we know that remodeling is expensive, right? It can cost a lot of money. So I'm guessing a lot of people will not be able to pay with cash. What are some other options?
Yes. So of course, lucky we live Hawaii because, cost of living. So most of us don't have cash. So for those of us without cash, the next option would be credit card. If you're going to use a credit card though, try and find one with a lower interest rate, and you can also take advantage of rewards cards, those with miles or points and whatnot. Just be careful about the annual fee, just a little tip. Sometimes the annual fee will outweigh the miles and the points that you get. So just kind of balance things out, but credit card would be the second option.
Okay, and I like what you said about those credit cards that actually give you cash back, or miles.
Yes.
You could maybe pay for a trip with all of the
or
miles
pay
that
for
you
the
get.
annual fee that it does cost, because the cards are not free. They
Right.
either have an annual fee or a higher interest rate, so you want to compensate for that.
Those are 2 great options. Option number 3.
Option number 3 would be a home equity line of credit. If your house does have equity, you can go ahead and apply for a home equity line of credit. And it's just like a credit card. It's just that you're using your house as collateral. So home equity line of credit will be a good option to actually finance some of your smaller costs and renovations. And what I mean by smaller costs is home equity line of credit typically will follow the market. So 3 to 5 years from now, unless you get one that you can lock in your rate for, the rates can go up. So you do want to be careful about using a home equity line of credit if you're going to put a very big, renovation or a project on it, like $50,000, $80,000, $100,000. So you just want to be careful about home equity.
Sometimes you can get a really low interest rate. I don't know, sometimes even no percentage points, right? Like for the first year or something. They have all of these great deals.
Yes, so it's like a teaser rate, but of course, when the honeymoon is over, just be careful. So if it is your intention to pay it off in a shorter period of time, say 1, 2, or 3 years, then taking advantage of those teaser rates, so to speak, is not a bad idea.
Okay.
However, if you are going to drag it out, if it is a big project and you do your budgeting, of course you want to do budgeting and make sure you can afford this.
Yes.
The 4th option, I'll just segue right into it, would be second mortgage. And the difference between home equity line of credit and a second mortgage is the second mortgage is a fixed rate. So you borrow a lump sum amount, and in turn you have a fixed rate and fixed monthly payment. So it's great. In your mind, you're like, okay, I have to pay $685 for the next 15 years. I'm okay with that at this fixed rate. So, I jumped to second mortgage, kind of a trade-off between home equity and second mortgage, depending on the price of your project and how long you intend to pay it off. Yes.
Option number 5.
Option number 5 would be just a straight-up personal loan. Of course, qualifying for personal loan is contingent on your credit, on your cash flow, and the terms on these personal loans tend to be shorter, 5, 6, 7 years. Some institutions have a longer term, so to speak, like 10 or up to 15 years, but it varies for institution to institution. I know Hawaii USA has a longer term for home improvement personal loans, so you can
Yes. Kili, thank you so much. These are great options for people looking to do that, right? Looking to spruce up their home.
Yes.
And it's good to know that you have several options out there.
Yes.
Right? You have choices.
Yes, we do.
So really the best way is just to go into Hawaii USA Federal Credit Union, meet with somebody and find out which option is best for you.
Yes,
right?
come on down. Check us out.
Thank you so much.
Thank you.
Thank you so much. We're going to have all of that information on our website as well. We are going to have much more on Living 808 when we come back. Stay with us.